now. Let me also welcome on board Ajay Bagga and ask him about what he's making in this market right now. Ajay, hi, good afternoon. Good to be speaking with you. Ajay, so much volatility in this week alone, and seems like finally you're settling in for crude. Not those sub 70 kind of levels, but circling around 70, 72 thereabouts. And Brent actually is at 76. What kind of a base case does that build up for India equity markets and the move forward from here?
I think the base case is looking good, Aisha, overall, and the broader market, of course, has outperformed the leading indicators. So you see Nifty mid cap or small cap or micro cap, they're all making 52-week highs. So overall, the broader market has outperformed. We are seeing strong volumes in the broader market, good cash buying coming in. Overall, I would say the Indian macro is now reflecting finally in the markets. It has been 2 years, nearly 2 years of underperformance, and we might just be seeing the turn coming in the market. A lot will now depend on how good the earnings delivery is. Last quarter, the operational results are looking good across a lot of the sectors. OMCs will make losses that even the minister has spoken about 75,000 crores odd of losses. So OMCs have been factored in, but the markets will look ahead to the guidance. So overall, I would say we are well positioned now, and from here, the market should outperform over the next 3 years.
Right, Mr. Bagga, hi. Do you believe the markets have largely digested everything that's being thrown at it from a geopolitical angle? And I ask you this because we've had that one major day of drop coming in on Tuesday, but ever since then, in the last three trading sessions, we've recovered all of those losses, and we seem to be holding on to the 24,200 mark, at least with some amount of resilience. Going ahead, the biggest trigger is going to be earnings. So do you believe the market is largely going to be focusing on that, and maybe geopolitics could take a back burner?
Yeah, it will depend on the escalation. Actually, if you look at the day we fell very strongly, that was more because of the escalation that happened on Tuesday and Wednesday. So a lot will now depend on the course of the war. Our assessment is neither side has the capacity to wage a very broad-based war. So there will be these skirmishes. Will there be a solution quickly? That is looking doubtful. So there will be a protracted negotiation. The Iranians clearly want to drag this as near to the November elections as they can, to hurt the prospects of the Republicans under Trump. So I think there will be protracted negotiations. Trump is looking for an off-ramp while saving face. So irrespective of the outcome, he will declare it as a victory and off-ramp from this. He wants to leave as soon as he can. So that's the major conflict between the two sides. Rest, they don't have the capacity or the appetite to absorb further, a broadening or escalation of the war. Neither do the regional powers. The regional powers also want peace, and they want normalcy to be restored in the strait as soon as it can. So I think that's what the market is factoring in. Oil, these are the September contracts which have gone up for Brent. Clearly, on a physical sense, oil is oversupplied because the Chinese have been underbuying. So they've not come in with 4 million barrels a day over the last 2 to 3 weeks. That has helped the market a lot on the margin. Russian refineries are down, so their crude shipments are increasing. What they used to refine internally, that also they are shipping to friendly countries and getting it refined and taking petrol, diesel, and other products back. So overall, the market is oversupplied already, and it will go into a very big oversupply if the strait opens. The other good thing is the Iranians have shipped out record numbers. So Iranians over the last 3 weeks have put out nearly 60 million barrels. UAE has sent out 65 million barrels. So, and just yesterday, the Iranians shipped out about 10 million barrels out of the strait. So there is a lot of supply coming into the physical market. The futures markets are having a risk premium. So we are seeing they are more inflated than what the physical markets are actually showing.
Okay, Ajay, hold on to that thought. Lots more to chat about, but I'm going to quickly take a break and come right back, continue our market discussion with Ajay Bagga and Kunal Bothra.
Back with closing trades, and we've been talking about a bunch of earnings from TCS to Indian Bank to Bank of Maharashtra, some stocks that have been a buzz on the back of earnings. Come tomorrow, that's Saturday, all eyes will be on Avenue Supermarts, the first company from the consumption space, the retail space, to come out with its earnings, as it always does. And here are some numbers that the street is penciling in. Just to bring you back to what the management's Q1 update looked like, standalone revenue from operations is estimated at 18,343 crore rupees, which is very close to now what the updated Bloomberg poll looks like. It's exactly at that number, so more or less in line with what the street is estimating. The EBITDA on a standalone year-on-year basis is expected to grow 15%. Similar moves for the profit growth as well. Margins, however, continue to be flat. At least that is the estimate, at around 8.2% levels. The revenue growth deceleration has come back once again basis the management's Q1 update, and that is something that weighed on the stock when the update came out. So we'll see what the price action on Monday looks like for DMart. But other than that, if I take a look at store count, that also looks weak, because remember, just in the last quarter they've added 58 stores to touch that 500 mark for them, and in the quarter gone by only 3 stores were added. So that's a very sharp drop in terms of their store acceleration plan. So that is also something that wasn't very happy about when the numbers came out. So lastly, what are we expecting to see other than the main headline numbers? For same-store sales growth, we're expecting that number to be in low to mid-single digits. Remember, this number was north of 10% last quarter, so moderation over there. And slower growth in Q1 that we're expecting is going to largely be a function of the aggressive store addition that we've seen in the previous quarter. So when the numbers do come out, of course, along with the headline numbers and the same-store sales growth, we're going to be watching out for their commentary on general merchandise and apparels, and the sales per square foot is going to be important to watch out for, the store addition plan for the rest of FY27, and commentary of quick commerce on the business. These are going to be some factors to watch out for. But all in all, we're not expecting to see anything exciting coming out of DMart this time, Asha.
Yeah, absolutely. That's the word coming in from DMart, and ever since its quarterly performance, in any case, the stock has been sideways to weak. But Ajay, where is it that you're anticipating meaningful growth in this particular earnings quarter?
Yeah, see, banks and NBFCs have given good operating results, so that should show a good pickup. Telecom is showing ARPU growth, so that should come through. The exploration part, the upstream oil will do well given the enhanced oil and gas prices that were realized. Then industrial should continue to do well. Consumption, also the revenues have been good. Consumer discretionary from auto to other discretionaries, durables, they should show a pretty good number. IT, we have seen inline numbers with one of the big IT majors results. Expecting that more, the market will look at two themes. One, how much is the AI revenue in the share, and AI enterprise AI revenue, and what is the growth looking like on the enterprise AI revenue. I think those two will be very critical for IT. Pharma is looking good. Hospitals will have good results. So cement, the input costs were high, volumes were not that great, but I think that's reflected in the prices. So unless they are very bad results, we actually expect cement to do better in this quarter, in the second quarter, which is on.
Okay, so those are some of the sectors that you're liking. Kunal, talk to us about some of the sectors that Mr. Bagga has spoken about, cement and the likes, and some other sectors that you are liking on the charts. Anything that could look exciting in the next couple of weeks?
Yeah, I think a few of the capital market themes are the ones which are looking attractive. So, for example, CDSL today is up, a 6% plus, but I think the manner of the breakout is quite strong, and this probably ends the stock's consolidation, which has been going on for the last, I think, 6-8 months for CDSL. The stock, struggling earlier to break past about the 1400, 1450 zone, but now it's on the verge of breaking out that 1450 mark. And the pattern is also extremely strong. We're seeing a higher top and higher bottom kind of a formation, a strong move which has happened for the RSI on the weekly and the monthly charts for CDSL. So I think all of that is extremely positive. The other and the best performing sector so far has been the real estate names. It's up almost 45% over the last 4 months. I think March end we were flagging off data that for 5 consecutive months, realty index had been underperforming and showing negative, and there could be a scope of a huge recovery. From those 650 levels on the Nifty Realty Index, we're almost at 930, 920 plus on the Nifty Realty Index. And the more interesting part is the composition of the stocks. Mix of mid-cap names, large-cap stocks, the high beta space within the real estate basket. I think that's also something which looks very attractive.
Right, okay, that's the take coming in right now on which way the markets are headed. But Ajay, great to have you on the show. Kunal, you too. We'll let you guys go on that note.